How's it going, guys? It's Ralph here from Beyond the Hodl. Welcome to this week's Bitcoin forecast. As always, we'll get started with the COT first, see what the asset managers have been up to, and what longs or shorts have been added. Then we'll move on to the Bitcoin margin accounts to see what the leverage traders have been up to, and then we'll wrap it up with some price action to see what our long-term and short-term price levels say. So let's get started. Okay, so getting started here with the Bitcoin CME positions of the asset managers, we can see that they actually increased 173 long contracts for a new position of 4,980, and then we increased the shorts 59 contracts to a position of 750. Now, although we can see that there was more longs than shorts, the ratio actually increased slightly more for the shorts than the longs. So then that means that when we go ahead and take a look at it on the chart right here, we can see that it actually went down a tiny bit. You can see that it used to be 88. Now it's fallen down to 87 last week, and now I know it says 87, but it technically fell to about 86 point something. But nonetheless, you can see right here, it's still way above the average here. We're not interested in picking any highs in these. We're going to ride the trend, and we're going to stay bullish. So that's what the COT is telling us. Remember, when we hit these levels, unless you see right here how it peaks its head above the 60 and then the 80, and then it quickly goes below it. That's what I don't want to see. I would want to see a nice sustained move like what we had here. Let me go get rid of all the other ones like I've been doing lately, because the most important chart right now is this percentage one. So again, you have two lines here. You have one at 60, a dotted line there, and a smaller one right here at 80, because we hardly ever hit 80. But when it does, again, pretty big deal, and we want it to stay there. So we don't want this one right here that it went quickly. So yeah, guys, that's what we have. Again, we're going to stay net long. The percentage is crazily bullish, and now what we want to see is just prices keep doing what they're doing. And I know this is a temporary drop here, but I don't think it's going to last, and that's exactly what we're going to be talking about in our price action. We're at a very important level, and then obviously in the margin account. So let's move on to that and see what we have. Okay, guys, so taking a look here at the margin accounts on Bitfinex, we're going to only focus today on the longs and the shorts. And essentially, we had part of the equation, right, which was we knew the shorts were going to increase because we were right here at this green line right there. We had rejected above it. We couldn't go below it here. We couldn't go below it here. And then we had rejected back above it. And then what we were saying is that, okay, it's fine if we go up, although, again, anytime this goes up, you should expect weakness in the market. But we also thought that the long the long positions were going to keep increasing. You can see this green arrow, and that's why I have two different arrows, right? So we only had one directional bias for the shorts. It was only to go up because they were already so low. How much lower can they keep going, right? So that was pretty easy to guess right there. And then we were targeting this quarterly open, which we actually almost hit. But by the way, this might actually be a bullish signal soon, because that's the premium being hit right there, right? Which coincides right there perfectly with the quarterly. So we did have this as a target, this premium right here, right into the quarterly. That, again, that did exactly what we thought it could do. And now remember, the only other thing it could do after coming here is either rejecting back down. So we'll draw another arrow there. So it's either going to come back down, or it's going to go ahead and go higher again to go above the yearly open and then into this premium. Now that would be catastrophic. Why? Because of what the longs are currently doing, right? So the longs, remember, we had two different arrows. It could either from the monthly open keep staying above it and go to the quarterly, and that's what I thought was going to happen. Even though the shorts were increasing, I thought that was going to set up a bull trap for these longs that, and I thought maybe price would hit about 70, 75K, but look what the longs did. They actually took their foot off the pedal last week, and then to start off this week, they ended up going lower. So longs going lower, shorts going aggressively up. They went up 133% in the past 2 weeks. We can obviously see now why prices drop. Now, again, based on what the COT is telling us, we're not afraid of this move, really, because the actual asset managers, right? Those are the big boys, the institutional players. They're telling us they're not afraid of this move. They're buying into this move. So I'm staying long as well. And remember, when they are this long, that's when we're supposed to be looking for exponential growth in these markets and swing trading type of, position trading type of movement. We're no longer in a short-term trading environment, which is what I've been in, ever since I call the high in April and the drop in May. So we have switched gears about 2 or 3 weeks ago to being now wanting to see some swing trading happening. Now again, the shorts are still not at the place where I like them to be, but as long as it stays around here, or even they start to decline the shorts, then we're looking pretty good. Remember, it's about the ratio, not the amount of shorts, and that's what's getting me right now. The ratio looks really, really good. But okay, anyway, so to get started, to keep moving forward, remember that we did say we could see one more deeper move into the longs, down into this green box if they could not sustain above the monthly open. So that seems to be what we're going to be doing, and that is just going to continue the bull run. It's going to continue the move higher. So that's what I'm looking for. Maybe we have one more aggressive and painful move lower in prices, because again, the longs can still fall another 9%. That's not to say it can't stop here, and I'm going to show you why. There's a swing low here, a swing high. You can see right here we're already starting to get a little bit of a move higher, so you can see the discount prices right there. Now remember, this is the margin accounts. This is not actually like tradable or anything, but the fib levels still seem to work very, very nicely in this type of stuff. It's just a Fibonacci thing, I guess. But you can see right here, swing low, swing high. We're going to go right back to here. So if this holds, then yeah, we can see some move higher in the market. And you can already see the shorts are starting, they're about to hit the quarterly open and our premium level. So we can see some weakness in this here, which means some strength in prices. So that's what I'm thinking here, the margin accounts, guys. Again, I think that soon we're going to see the lows in the longs and hopefully the high on the shorts. And then that's going to allow prices in the spot prices, Bitcoin and the rest of the market, to go higher. So let's move on to the price action and see what we can find. Okay, so taking a look at the price action side of things, let's get started here with a post I made on Twitter on November 14th at 11 at night. And basically what I was saying was that these were the coins I was interested in, Anchor, LTC, TRB, ZEC, and I also obviously had my ETH that I bought, a while back. And then again, what I was expecting was I wanted to see, these are the alerts that came in through the smart money scanner and all that, but I was expecting, obviously the market to keep going higher, but then I saw something that really I didn't like, so I figured I'd post about it. And the problem was we had opened the market below our short-term level. Okay, so I was going through my analysis like I do every Sunday night, and I noticed this. So because we opened below it, that means that I want to see an aggressive move back above it, and if we can then close back above it, then I can stay in my positions. If I don't, then I have to make some decisions, right? So my decisions, and again, we never really talked about this in this channel, but I have two different mental models that I can choose. First, I ask myself, what is my the asset managers doing here? And because right now we are looking for short-term, for swing trading / exponential rallies in the market, I am not short-term trading. Remember, back during some of these price action levels right here, I was looking to short-term trade based on everything what was going on, but now we switched a couple weeks ago to long-term trading. Because of that, that means that I would reduce my exposure, not get fully out of the market. Okay, if I'm short-term trading, I'm only risking a certain percentage of the portfolio per trade, and then getting out when that trade gets invalidated. So the idea here was the longer it stays below the green zone, our weekly short-term level, the more the higher alert you have to be, because that's a bear sign. Obviously, we can see how this all ended. But then I ended up posting a day later. You can see right here, well, actually, I ended up posting not even a day later, about 12 hours later, 16 hours later. You can see right here we had hit the So when I posted it was somewhere around here, this green candle, then we had hit the weekly short-term level. We failed to break above it. Okay, now remember, I'm not your signal service guru here, so I'm not telling you exactly what to do, but I said it's not looking too hot at this moment in time. After we rejected from it and went below the weekly open, I told myself, okay, the smartest thing to do here is reduce exposure. So I went from holding ZEC, ETH, and TRB to not holding TRB anymore. I kept I reduced 50% of my position on ZEC, 50% of my position on ETH, and that's where I'm sitting at right now. Now, obviously, I'm getting destroyed here on ZEC, but ETH is actually holding quite well, and I think, again, I have high hopes for both of them in the long term, but ETH is surprisingly holding very well, so hopefully the low is near, and we're going to go over that real soon. But you can see right here that obviously we ended up losing right here, so it says right here, fell as we thought due to the way it opened. And again, right here is where I decided to, it's funny enough, again, you could call it just lucky, lucky timing that I didn't have to exit that 50% down here. I ended up closing it down or up here. So again, you have to pay attention the moment that we close below these levels, because there's always that risk that this happens in prices, right? So I said, if I had to guess, this was 2 days ago, I said, if I had to guess, the lows are near. Right, so now we can go into the price action and we can start to take a look at this. So we're going to get rid of this weekly one because that's from 2 weeks ago, and then here it is, right? So now Bitcoin has now fallen as much as 12%. Again, it could get a little more bloodier if we lose our monthly level, and that's kind of what I'm worried about right now. Remember, I still have 50% of my positions on, and I would be looking to get out of the entire portfolio, depending how we react here. There is one more level I'm looking at right here to see if maybe I will hold on to that 57K, because remember, I do want to respect the asset managers and the COT, because it does tell us that we're macro bullish. So maybe this $57,000 level right here, if I might hold on for that. So maybe another move about, I don't know, 3-4% move lower, and then I'll make a decision if I want to, get rid of the rest of my positions or not. But for now, again, this is our monthly macro level, and we don't want to lose that on a daily or a weekly. So you can see right here, on a daily, we're still respecting it. We ended up dipping right into it. We couldn't close below it, and now today seems to not want to close below it. So this is exactly what we want to see. Maybe tomorrow we get some disgusting drop right here, and then it keeps it rejects right off of it again. And look at this. What do we have here? We have a nice demand zone right there. So again, you know what? Now that I'm seeing it right now, I might just hold on for that right there, and then make my decision to see if I want to take off the rest of the 50% or not right there. Because again, if we lose that, it could get pretty ugly. We can see 47K and so on, and it can get even worse on some of the altcoins. And again, I'm getting slaughtered on ZEC, so I am grateful that I'm only at half risk right now. So with that being said, guys, that's what I have in mind. Again, you have to really respect these short-term levels, because the market will fluctuate up and down while your macro COT bias can be a different thing. And obviously our macro is bullish. As you can see, they're 86% net long, which is insane. And that's the only thing keeping me hopeful for this to be long-term bullish, because it's never failed me before. So with that being said, guys, I hope you have a great day. Again, I'm sorry that this took 2 days longer than expected. They didn't give us the information on Friday like they usually do, and I was busy yesterday. So with that being said, stay tuned for tomorrow. Misha will be here with some altcoin analysis, and I'll see you guys next Monday. So stay safe out there. Peace.